$1.3 trillion in 3 months. I need to lie down just saying that number.
You're getting blinded by the top line again. Actual deal volume dropped 17%. This is just Elon moving $250 billion from his left pocket to his right pocket.
Calling the SpaceX buyout of xAI a pocket transfer offends my former banker soul. But you're right, it completely warped the quarter.
It did. But while everyone is staring at the stars, traditional software companies are having absolute valuation meltdowns in the boardroom, and private equity is already circling. Dansson, the rundown.
You can't tell me Klarna doing a $1.7 billion securitized real estate transaction is normal? Since when does buy now, pay later mean commercial property?
Since VISUfarma Partners decided to lead the facility. I read the filings on this. It's basically a massive balance sheet cleanup disguised as a real estate play.
Classic financial engineering. I love it.
Of course you do. But let's look at actual M&A. Danaher just dropped $9.9 billion on Masimo.
Huge healthcare play. Masimo has the patient monitoring tech. Danaher has the global distribution. It's textbook synergy.
Oh, come on. Textbook? Danaher is paying a ridiculous premium. Masimo's consumer audio division is still a total distraction, and their core medical tech has been bleeding margin. You're just buying the banker pitch deck, Nate.
I'm buying the scale. Look at the macro numbers for Q1. Deal volume is actually down 17%, but overall deal value surged 26%. Buyers aren't messing around with cute little bolt-ons right now. They want needle-moving mega deals.
Which explains why private equity is circling like sharks. Take private maneuvers jumped 9% in February alone.
The panic is real. The whispers I'm hearing out of software boardrooms right now are brutal. Traditional SaaS companies are watching their valuations crater because everyone is terrified AI will just code their core products for free.
And sponsors are ready to scoop them up at a discount. That's the real AI disruption. It isn't just new tech, it's a total repricing of legacy software.
Exactly. Though not everyone is playing the tech casino. Antin Infrastructure just bought Sapphire Gas Solutions from Apollo. Boring, safe, natural gas.
Lupin also just closed on VISUfarma, European eye drops. Sometimes boring is exactly what you need to hedge against the madness, especially with volatile Middle East energy markets threatening the financing conditions that made Q1 possible.
True. We're also keeping an eye on U.S. Bancorp's pending $1 billion buyout of BTIG. Regulatory hurdles are getting sticky there.
We'll track that. But speaking of madness, we need to talk about the rocket in the room.
The $1.3 trillion quarter doesn't happen without Elon. $250 billion. SpaceX acquiring xAI.
I spent my entire weekend pulling apart the cap tables on this. You're going to want to hear what's hiding in the disclosures. The big one.
$1.3 trillion in a single quarter. I had to refresh the terminal 3 times because I thought the data feed was broken.
And the wildest part is that overall transaction volume actually dropped 17%. People are doing fewer deals, but the checks they're writing are absolutely massive.
Needle-moving mega deals. That's the only game in town right now. If you aren't hunting elephants, you aren't hunting.
Well, when the elephant is a $250 billion acquisition of xAI by SpaceX, it kind of skews the entire safari.
Okay, let's talk about this. $250 billion. It sounds insane, but strategically, I think it's a masterstroke. You take the compute power of xAI, you pair it with Starlink's global data pipe, and suddenly SpaceX isn't just a rocket company. They're the internet, the infrastructure, and the brain.
A masterstroke? Nate, I read the filing. They're paying $250 billion for an entity that doesn't have the software revenue to justify even a tenth of that multiple. You're telling me this isn't just Elon shifting money from his left pocket to his right pocket?
I'm telling you, it's the ultimate vertical integration. Think about it from a banker's perspective. The cost of capital for AI infrastructure is exploding. SpaceX has the cash flow. xAI needs the compute. Put them together and you bypass the public markets entirely.
Oh, please. If any other CEO tried to buy their own side project for $250 billion, the board would have them committed. The governance structure here is basically just a mirror.
That's entirely fair. The fairness opinion on this transaction must be a work of abstract art. I would pay good money to read that pitch deck.
There probably wasn't a deck, just a tweet. But the ripple effect is very real, because SpaceX just set the floor for AI infrastructure. Traditional software companies are facing a brutal reality check.
It's a massacre out there. The whispers I'm hearing from the tech sector say traditional SaaS boardrooms are incredibly tense right now. Valuations are getting hammered because buyers are terrified these core business models will be obsolete in 12 months.
I saw the data on this yesterday. Private equity is absolutely smelling blood in the water. Take private maneuvers jumped 9% in February alone. Sponsors are just circling these vulnerable public companies, waiting for the management teams to crack under the pressure.
Which is classic PE behavior. Capitalize on the chaos. They see the AI disruption not as a risk, but as a pricing lever to take good companies private at a massive discount.
Exactly. Which is why that 26% surge in Q1 deal value is a little deceiving. It's not all happy growth. A lot of it is rescue missions, forced consolidation, and defensive maneuvers disguised as synergy.
You always ruin the romance of a good mega deal.
I just read the footnotes, Nate. And speaking of footnotes, this whole trillion-dollar quarter relies heavily on debt markets staying open and stable.
Right, which brings us to the Middle East and the volatile energy markets. If those financing conditions crack, this mega deal party ends at midnight.
We're already seeing some regulatory cracks in the financial sector too. Keep an eye on US Bancorp. They're still trying to push that $1 billion BTIG acquisition through the final hurdles, and Washington definitely isn't making it easy. Voices.
So the consensus from the analyst desk this morning is that companies are suddenly prioritizing these massive needle-moving mega deals. They keep pointing out that deal volume dropped 17%, but overall value surged 26%.
I read that exact note and I actually laughed out loud. It's completely misleading.
Oh, come on, the numbers are the numbers. 1.3 trillion for Q1 is massive.
The numbers are skewed by one giant anomaly. You take out the $250 billion SpaceX and xAI deal, and that 26% surge vanishes. It isn't a broad market shift toward mega deals. It's just Elon moving money between his own pockets.
Okay, fair point. Very banker of me to ignore the massive outlier. But the underlying thesis from the experts still holds up. AI is fundamentally restructuring how we value companies right now.
Sure, if by restructuring you mean completely destroying traditional software valuations.
Exactly. The whispers about these SaaS boardroom showdowns are getting loud. Founders are panicking. And who's waiting in the wings while they fight? Private equity.
Always.
Take private maneuvers jumped 9% in February alone. Sponsors are basically circling these vulnerable public tech companies like sharks.
Sharks with dry powder. I'd love to be a fly on the wall in one of those SaaS boardrooms right now. Just a bunch of executives realizing their 5-year product roadmap was rendered obsolete by a new language model over the weekend.
It's a brutal reality check. Which brings us to the financing side, because none of these sponsored deals happen if the debt markets freeze up.
Right? Everyone is watching the Middle East and the energy markets. That volatility could absolutely wreck the financing conditions that gave us this record-breaking Q1.
Speaking of things we're watching tomorrow, keep an eye on US Bancorp. They're trying to clear the final regulatory hurdles for their $1 billion acquisition of BTIG.
Assuming regulators actually let a bank buy something for once. We'll see how that plays out. Spill the tea.
I'm telling you, the shouting matches happening in these legacy software boardrooms right now are legendary.
Oh, to be a fly on the wall for those PowerPoint presentations.
Right? You have these founders who thought their SaaS multiples were guaranteed by God, suddenly realizing AI just ate their entire product roadmap.
And the private equity guys are absolutely smelling blood in the water. Look at the February numbers. Take private maneuvers jumped 9% in a single month.
It's a total feeding frenzy. These PE sponsors are just circling vulnerable public companies like sharks around a leaky life raft.
See, I disagree with the shark analogy. I think half these software boards are actively throwing chum in the water. They want to be taken private.
Wait, really? You think they're surrendering?
Completely. If you're a legacy software CEO right now, going private is your only cover. You can't rebuild your entire infrastructure for AI under the public market's quarterly microscope. The math is brutal.
Okay, that's actually smart. Hide in the PE cave while you figure out what a neural network actually is.
Exactly. Because right now their entire AI strategy is just slapping a .ai domain on a 10-year-old codebase and praying nobody reads the footnotes.
Ouch, but fair. The valuation adjustments are incredibly harsh right now. You can't fake it anymore when companies like SpaceX are throwing $250 billion at xAI. The bar is just too high.
Speaking of harsh adjustments, we need to keep an eye on US Bancorp tomorrow.
Oh, right, the BTIG deal.
$1 billion, and they're still sweating out the final regulatory hurdles. Plus, with the Middle East energy markets getting volatile, the cheap financing that made this quarter's $1.3 trillion run possible might just dry up overnight.
Let's see if the regulators actually sign off, or if they drag it out for another agonizing month. Tomorrow's radar. Keep your eyes on US Bancorp tomorrow. They're supposed to clear the final regulatory hurdles on that $1 billion BTIG acquisition.
Supposed to, but honestly, I'm watching the Middle East and these wild swings in the energy markets. If oil keeps jumping, the debt markets are going to freeze up faster than a junior analyst over Christmas.
Oh, come on. The debt markets aren't freezing over a $1 billion deal. US Bancorp can fund that out of their couch cushions.
It's not about the couch cushions, Nate. It's about the contagion. Q1 gave us a record $1.3 trillion in deal value because financing was cheap. If energy volatility spikes yields, all those private equity take-privates we saw in February are going to stall out.
Sponsors do hate expensive money, but I still say the regulators are the bigger roadblock for BTIG right now.
We'll see who's right when the filing drops at 6 a.m. tomorrow. Get your coffee ready.